Okay, we should be live. Okay, how about now? That sounds better. Okay, whatever. It's looping everything. I'm just going to assume it's okay. I'm just going to assume the audio is fine, which is probably stupid of me. But anyway. So, shit. Today I wanted to cover the wedge pattern, whether falling or rising wedge. We'll cover both of them. And it's a forex pattern, so we'll get into it. Actually, it's a pattern across all markets, but anyway. Falling wedge. Falling wedge is a bullish pattern that begins wide at the top and contracts as price move lower. This price action forms a cone that slopes down at the reaction highs and as the reaction highs and reaction lows converge. In contrast to symmetrical triangles, which have no definitive slope and no bias, falling wedges definitely slope down and have a bullish bias. Yeah, that's better. It's a forex pattern, so we'll get into it. Actually, it's a pattern across all markets, but that sounds better. Okay. However, this bullish bias cannot be realized until a resistance breakout occurs. While this article will focus on the falling wedge as a reversal pattern, it can also fit into the continuation category. As a continuation pattern, the falling wedge will still slope down, but the slope will be against the prevailing trend. As a reversal pattern, the falling wedge slopes down, and with the prevailing trend, regardless of the type of reversal or continuation, falling wedges are regarded as bullish patterns. Now, typically, a lot of times, wedges form after parallel channels start to lose momentum. Okay, I'll give you an example here. On Euro US dollar, here's one. So originally we had this parallel channel. Right, price is trending okay down, and it starts to lose momentum downward. And what happens? Well, you end up with this wedge, but this upper trend line still stays intact. So you end up with this wedging, and we're getting a wedge now on the euro too. We have this. It's been wedging for a while. What other wedges are there? There's all kinds usually. Anyway, okay. Prior trend to qualify as a reversal pattern, there must be a prior trend to reverse. Ideally, the falling wedge will form after an extended downtrend and mark the final low. The pattern usually forms over a 3 to 6 month period. Depends what time frame you're using. Once again, if you're on the daily, if you're on the weekly, okay, yeah, that makes sense. But if you're on, if you're looking at charts on a 5-minute or an hourly, okay, that doesn't make any sense. So, upper resistance line, it takes at least 2 reaction highs to form the upper resistance line, ideally 3. Each reaction high should be lower than the previous highs. Lower support line. At least 2 reaction lows are required to form the lower support line. Each reaction low should be lower than the previous lows. Contraction. The upper resistance line and lower support line converge to form a cone as the pattern matures. The reaction lows still penetrate the previous lows, but this penetration becomes shallower. Shallower lows indicate a decrease in selling pressure and create a lower support line with a less negative slope than the upper resistance line. Resistance break, bullish confirmation of the pattern does not come until the resistance line is broken in a convincing fashion. It is sometimes prudent to wait for a break above the previous reaction high for further confirmation. Once resistance is broken, there can sometimes be a correction to test a newfound support level. Volume. I'm not going to cover volume. As with rising wedges, the falling wedge can be one of the most difficult chart patterns to accurately recognize and trade. When lower highs and lower lows form, as in a falling wedge, a security remains in a downtrend. The falling wedge is designed to spot a decrease in downside momentum and alert technicians to a potential trend reversal. Even though selling pressure may be diminishing, demand does not win out until resistance is broken. As with most patterns, it is important to wait for a breakout and combine other aspects of technical analysis to confirm signals. So as we see here, we're still getting lower lows, but it's converging with the top trend line, and we're getting this wedge, less downward momentum. Finally, a lot of times, a lot of falling wedges end in a double bottom. You'll see a double bottom. Breakout, it breaks this upper trend line, and price pulls back, retests that resistance, turns support, and you get your move higher. So a lot of times you want to get long right on that breakout pullback if you can't find a double bottom or something like that. We'll read through the rising wedge real quick too. The rising wedge is a bearish pattern that begins wide at the bottom and contracts as prices move higher and the trading range narrows. In contrast to symmetrical triangles which have no definitive slope and no bullish or bearish bias, rising wedges definitely slope up and have a bearish bias. Though this article will focus on the rising wedge as a reversal pattern, the pattern can also fit into the continuation category. As a continuation pattern, the rising wedge will slope up, but the slope will be against the prevailing downtrend. As a reversal pattern, the rising wedge will slope up and with the prevailing trend. Regardless of the type, reversal or continuation, rising wedges are bearish. Prior trend, of course. In order to qualify as a reversal pattern, there must be a prior trend to reverse. The rising wedge usually forms over a 3 to 6 month period. Once again, it depends on the time frame. Sometimes the current trend is totally contained within the rising wedge, and other times the pattern will form after an extended advance. It takes at least 2 reaction highs to form the upper resistance line, ideally 3. Each reaction high should be higher than the previous high. At least 2 reaction lows are required to form the lower support line. Each reaction low should be higher than the previous low. Support break, bearish confirmation of the pattern does not come until the support line is broken in a convincing fashion. It is sometimes prudent to wait for a break at the previous reaction low. Once support is broken, there can sometimes be a reaction rally to test a newfound resistance level. Volume. Ideally, volume will decline as prices rise and the wedge evolves. An expansion of volume on the support line break can be taken as bearish confirmation. So, yeah. So the previous reaction low, for example, it gives this example here. This would be your previous reaction low. And you can see, I mentioned waiting for that to be broken, and you get a break. That breaks, you get a pullback. And a lot of times you can get short there too. So it really depends. Typically you're going to end up getting up in on a pullback or a double top, something like that. I'm not going to cover that because I can show you examples here. Not that I have any ready, like I should, but let's take a look here. I'm sure I can find some. Maybe not. Actually, that's the perfect channel, it looks like to me. Yeah, they're about. That can't be confirmed, really. Okay. Doing a really good job of finding something for you guys. Here's one. This one's a lot bigger. This is on the weekly. But here's a rising wedge. Price is moving higher, but it's losing momentum. Top trend line, bottom trend line. We also have another wedge, much smaller one here. Another rising wedge, more pronounced on the daily. See if we can find a falling wedge for you guys here. Let's go somewhere random. Falling wedge, falling wedge. Where are you at? We need something that rallies. Come on. I need a falling wedge. Okay, here's one. Here's a falling wedge. Sort of. I don't even think that's a falling wedge. That's a parallel channel, it looks like to me. I thought maybe kinda, but okay. Man, I'm struggling here. I'm choking. Good Lord. There's got to be a falling wedge somewhere. I could go down to a 5-minute and just find one, but I don't feel like it. This is just dumb. Okay. Oh, here's another rising wedge. Here's a falling. It's not great. It didn't hold, but here's a falling wedge. Okay. Yeah. So that's the wedge pattern. If you have any questions, ask away, because I'm sure I Probably didn't explain it perfectly, but yep. Hope you enjoyed. Take care.